Washington's words whipsawed Wall Street today. Everything turned up as Trump said that the war is going pretty good. It might be over sooner than anyone thought. Well, we've got some concerns. We're definitely in a headline-driven market. In this particular week, we've got a lot of data dropping. I'm going to try to go through that very carefully. I've got another pick for you today. It's an earnings play for a stock that's reporting this week that I think's got some upside potential, but you want to get on it quickly, and I'm not calling it through earnings. I'm only calling it up to earnings. I think there's a little bit of money to be made on a enterprise software company. The reporting this week, I'll lay that out for you guys today. We got to talk about the impact of the price level we did on oil, because whenever we get this high, it means something. It precedes something very, very big. And what everyone will tell you is, well, this time will be different. But most of the time, it's not different. And so we got to take into account what it means for the price of oil to get up to $140. Welcome to Wall Street. This is the Stocks with Josh show. I had a really nice trading day. It's because I was taking my A-plus scalp setups. You say, what are those? In my pro trading community called Chart Goat University, where you can come to learn to chart and trade alongside me and my crown traders, I dropped my A-plus scalps this morning, half an hour before the market opens. These are my levels that I'm going to trade throughout the day. We've also added an indicator that'll give you buy-sell signals for when you should get in. I happened to be in some place this afternoon when Trump made those comments, and I had a nice day going, and it got much, much nicer as prices just rocketed higher. Now, I want you guys to be aware. I'm going to take you also into the SPY, and I'm going to tell you exactly the line that we can't close below by this Friday to stay bullish, because we can stay bullish. As I had warned last week and the preceding week that we were still moving down. And at the end of last week, I said, we're going to open up Monday much lower, and we did. Well, I've got a new level for you that we've got to hold this week for the bulls to remain in charge. And they can remain in charge, and we can go right back up towards the top of the trend. I will tell you, though, that having lost those 2 weekly candles beneath the 9 EMA is signaling something that's coming. Now, when exactly is it coming? I can't tell you. We'll try to dial that in by watching the charts from day to day, but definitely there is a problem coming. And I think the fact that oil got as high as it did and the impact that that could still have on the economy is also something that precedes one of Wall Street's most feared words, recession. Now, I'm not calling for a recession today. I think we're going to have a lot of whipsawing, a lot of volatility, and we're going to see we can go right up to the top of the range, but we went up for a long time. We moved sideways and had stealth selling distribution for a long time. We can continue to play within this range, but we are getting some very, very ominous signals that you just don't want to ignore. And it doesn't mean sell everything. It means because there's money being made right now to the upside. I've called out stocks like AMPX every day last week. We also talked about HIMS for the last 2 weeks. A very big move on positive news. Let me know in the comment section if you made some money on HIMS and AMPX. I got a new one for you guys today, but let's kick things off by getting into the oil chart, because you need to know what happens when oil gets as high as it has. And we're not out of trouble yet just because Donald Trump can move the market with a single comment. What that should tell you is that he can move it again to the other side with another comment. So we got to follow the charts, follow the money, and try to get some of that money while we're doing it. Let's go look at the oil chart. I've got on my chart oil, 3-month candles. Each of these candles represents 3 months in the market. What is this peak back here? Well, this is 2008. And we know that in 2008, when oil got up to $140, what happened then? Well, we had a really rough recession in the years ahead. Well, let's look at the next peak that we've got right here. Well, this was 2022. And I think you can see where I'm going with this already. Anytime oil gets up into this region, it typically precedes a very negative overall market reaction. And where are we playing right now? We're playing in the danger zone of oil. This typically sends shockwaves to the market and brings us into some form of a recession. Of course, 2008 was a mega recession, and 2022 was a mild recession, I guess some might say. And we have no idea what we're going to get right now. But we are going to have some trouble with the impact of oil hitting the economy, especially if this is prolonged. Now, let me know if this time will be different. Tell me in the comments. I don't think so. I'm not predicting for the markets to fall apart tomorrow. All I'm telling you is these types of events typically precede a recession. All right, let's go look at the SPY and what it needs to maintain to continue to go up this week. All right, we're looking at daily candles, and as I warned on Friday, we were going to go lower. We did. We had quite a flash crash down, but of course we bounced and had a nice little buy volume in line with the sell candles that we've had over the last week. So nothing particularly special, but it was a pretty nice day up. All we got to do is finish this week above 671, and we actually could return to the top of the range. That's very, very possible. I also want to acknowledge that we have an engulfing candle on the daily time frame, which is also bullish. We're always looking for confluence. We want to stack some bullish signals. We need to continue to go higher and break out from here if the markets are going to hold up and possibly go back towards the top of the range. So that's what's happening with the SPY. We saw that Bitcoin had a little bit of a relief move higher. We're going to be watching that chart very carefully because if the markets want to go higher, we'll ride them higher. I had a really nice day trading my own A-plus scalps today. I let the Discord know how much money I made, and I was booked in for a typical day. But following the buy alert on the A-plus scalps had me holding a position when those rocket green candles appeared in the afternoon, and that popped me up double my daily goal. So it was a nice day. All right, let's get into the stock I want to talk about. It's an enterprise software company. I'm going to tell you right out of the beginning, I actually don't love this stock. I actually am not convinced that AI won't hit them hard in the years to come. But I'll admit that we haven't gone through earnings yet. Earnings is this Thursday after the market closes for Adobe. Now, we haven't gone through that event yet, so we don't know how they're doing, whether or not this is a growth period for them or whether they're losing some market share. But I'll tell you right out of the gate that the chart's not doing good. It's down over 50% from its all-time high. So the PSMV, price structure momentum volume, is actually a 3.8 out of 10, which isn't a good score. It means the stock has been in a bearish trend. But surprisingly, smart money, institutional money, has been positioning themselves long to the ratio of 14-7, which means that they are preparing for some sort of maybe good news event, but it doesn't even have to be a good news event for Adobe. They simply have come down so far that in the right macro environment, if the news isn't horrible or as bad as Wall Street feared, it could panic the bears to get out of their short position and cause the stock to go higher. Let's jump into the chart and I'll tell you exactly what I think could happen. All right, this is a simple play. It's a pre-earnings play. I called this one out last week when it was a little lower. If you jumped on it then, you've already had a nice run up. I see an easy move to around $300 and a possible move all the way up to $315. This is just going to be some quick, easy money. Personally, I'm going to get out of it before earnings because no matter where we end up this week, unless we can get above 362, the bears are 100% still in charge of this stock. I just think that we'll get up in this range, possibly face some rejection over the course of the next month, and we'll end up coming back to 244. So to be very, very clear, this is a trade to the upside before the earnings event. I might hold a single lotto options play through earnings, but for the most part, this is part of the pre-run-up. Now, why do some stocks run up before earnings? Well, the bears who've been holding this, as I said, it's 50% down from its all-time high. They're wanting to cash out before the catalyst event, which could potentially create a reversal and wipe out all their gains. So the more conservative Wall Street traders are going to close up their positions, their short positions, and that's going to give this a little bit of an updraft move, which you can see in the chart that it's already had. It's actually been on a 7-day green candle streak so far. And I think it'll continue for a little bit longer. And I let the Stocks with Josh Discord know. And we've all made a little bit of money on that so far. Let me know if you're in the Adobe trade. And if you think that there is a greater catalyst reason for this to go higher now than nobody's expected. The bottom line is AI could be helping this company. AI could be hurting this company. We're going to need some earnings cycles to see what's really happening. And that's what's ahead of us right now. So nobody knows. We'll see what happens. But I'm writing it up for the time being. Now, let me just quickly wrap up this video with a couple other highlights to this week. Tuesday, we've got Oracle's earnings. I think Oracle has a ton of debt, but that's going to be a volatile play. Wednesday, we've got the February CPI, and I'm going to be hosting a Stock Squad video at 7 p.m. Eastern time to react to that news. Then Friday is a big data day. We've got the Q4 GDP revision, January's PCE, and then the January job openings and labor turnover rate. That's your schedule for the week. That's your hot play. I'll see you tomorrow. Peace and blessings, my friends. Hit that like and subscribe on the way out and come check out the Stocks with Josh Discord to get the next trade.
Meet Dave. Dave misses things. A lot of things.
Sold out.
break. But the one thing Dave never misses is the stock market, because he has the friendly stock screener. So he knows what's moving, what's building, and what's not. Dave still misses plenty, but the market moves.
Not a chance.
The conference was yesterday.
The friendly stock screener. You can miss a lot of things, but don't miss the next stock move. Only on the Stocks with Josh Discord.